investment. So, Arif Saab, can you share your views on that? You are a veteran. You are there in this market for ages. You have seen all these booms and busts, and hopefully, we'll see more booms, inshallah.
Okay. Thank you, Amir. First of all, let me congratulate CFA Society for its 20th anniversary. And Shoaib, in fact, asked us to use the CFAs in their companies. And we are very much using them in different organizations and different, particularly in securities market, in our asset management and in REIT management and other companies as well. And we also, in fact, are very happy with them. We are giving them premium as compared to other professionals. And they have been instrumental in fact, achieving us the standards, you see. But they have not been able to make money until now, you see. So the money being made by Kharadar people, as Khalid Mirza said. You said, but we are very confident that the next 20 years or in the next, in near future, they'll also learn how to make money, you see. You see, the Pakistani market's record is very pathetic. I see it's very unsatisfactory as far as its performance is concerned, because the main objective of the market is to raise money for the corporates. And there, I think Pakistani market has failed. The secondary market activity, we saw the boom and bust cycles. And we have done well, as you said, that in terms of infrastructure development, the central depository, the computerized trading and national clearing, etc. And we also done some structural reforms there. Structural reforms also have partly, in fact, benefited, and they also has put dent on our market as well, because the stakeholders have been thrown out and non-stakeholders have been brought into the stock exchange management. That balance, I think, is very necessary. The stakeholders also remain part of it, and non-stakeholder professional, they also become that. But you see that the main reason for this poor confidence of the investors in our market is the weak performance of our economy. And because of the weak performance of our economy, I think markets are not doing well. And you see that two factors, that was, one is the our exchange rate stability and the interest rate. So when I was looking at the performance of the market, the period in which our rupee was stable and the interest rate was low, our markets have done very well. You see, period between 2003 to 7, the best period was 2003 and 7, where the rupee was stable, where the interest rates were low. And again, in the period from 2013 to 16, 17, there we saw that interest rate was low and the rupee was stable, and we did well. And in fact, we saw the sharp devaluations in between, which in fact damaged the investors' confidence, and particularly the foreign investors' confidence. You see, in the last 10 years, you see, when we see the 20 years record of Pakistani market, it is satisfactory. The average return of last 20 years comes to about 19% in rupee terms and about 13% in terms of dollars. Whereas in the last 5 years, the rupee terms performance of the market is only 0.6%. Whereas the dollar terms, it's minus 12%. So when the highest portfolio outstanding investment was in 2017, which was $8.8 billion. Now it has come down to $1.3 billion, and out of which I think the free float or secondary market portfolio would not be more than $500 million. And so that also speaks of the foreigners' confidence in our market, and mainly because of the macroeconomic poor condition. The foreigners, in fact, are not very much seem to be interested in Pakistan until we, in fact, make our house in order and we take the right decisions. And if they would see taking us right decisions, then I think they would come again to the market, because we have seen that in 2008-9, the portfolio investment, foreign portfolio investment had gone as high as about $6 billion, then came down in 2008 to $1.6 billion, and then again went up to $8 billion. So the number one, I think, and for local investors, you see, they also look at the economic fundamentals, and if those are not in right direction, they are shy of coming to the capital market. The other reason, I think, for local investors is that the other competing asset class are giving much better risk-adjusted after-tax returns as compared to securities market. The security market, the numbers which in fact I was giving was before tax and before risk-adjusted. In fact, the other competing instrument is fixed income securities. Fixed income securities have been giving, because of high interest rate, giving good returns. That's why even the mutual funds are finding it difficult to attract the equity investors. At one time, the funds under management, about 42-45% was in equity investment. Presently, it's only 13% of total asset under management is in equity. That also tells the story. So we in fact, other thing which is the real estate sector. Real estate sector also has been very, very profitable and is not very much documented. It's not very much tax there. So there the returns are very high. Those are not very documented. The undocumented money goes there, and they don't need any skill, because in the stock exchange or in securities market, you also need to have a skill to make decisions for picking up right companies and right securities. Similarly, you see that our market is also suffering, as I think Seema Saiba was saying, that our debt market is non-existent, in fact. It is in decimals only, decimals of total GDP. And that mainly because we have two markets of debt. And one is a market which, in fact, is for the banks only, for the banks and financial institutions. Others is for individuals only. So individual market is non-existent. It doesn't have any liquidity there, so nobody, in fact, interested in that. So we have been, in fact, advocating that these two markets should be merged. And once that is merged, that would definitely create interest among individuals and corporates to, in fact, tap this market. And I think that would be very, very beneficial for our market, and that would also increase the size of the market. I have other factors as well, which I think is the regulatory issues, which I think we need another session. In regulatory, the companies, in fact, are not encouraged to come to the stock exchange. Rather, they are, in fact, restricted to come to the stock exchange. So small companies and medium-sized companies, for them, these regulatory requirements are very stringent. And there is a impression here that going to the stock exchange is not a right idea, because that would, in fact, make you accountable to the regulators, and very, in fact, international high standard requirements which the local companies cannot afford it, at least the medium-sized companies. And the capital issue rules are such, they also don't facilitate the new industries and new companies to raise capital for their projects. So that is also an issue which I think need to be reviewed by stakeholders. the other thing which in fact for the next 2 decades, which in fact you are targeting, I think we must have some type of one should say that a task force or a group, which in fact review all these reforms which have done in the last few years, and also in fact recommend the policies and the reforms which in fact are needed to make our market attractive for the investor, for both local and foreign investors.
Thank you, Arif Saab. I think you have given a lot of points to ponder.